Hey guys, welcome back to the channel. So with the 2021 inauguration behind us, Joe Biden has won the Democratic nomination and the presidency. With that, these are 5 stocks that I think are going to do well in 2021.
All right.
Before I mention any stocks, just remember that this video is for educational purposes only. Always want to make sure you do your own research before investing. Before I talk about my stock recommendations, I want to go in and talk about what I think the market outlook for 2021 is. And to start, I think tech is insanely overvalued. We've seen PE ratios really high, upwards in the near 30s, even into the 40s. With all of this money printing and QE going into the economy with stimulus checks, I think that the market is overvalued. But that doesn't mean you can't find a return somewhere. I certainly do believe we will see some sort of inflation, but I don't think we're going to be seeing hyperinflation. My prediction is somewhere around the 3 to 6% range. That's kind of in line with what we saw during the 08 recession and then the QE then. It started off very easy and we slowly inched our way back into kind of a normalcy. And I think that is where we'll be targeting, is around that 3 to 6%. All of this does run on the prerequisite that we do get the vaccine pushed out relatively quickly, because I think once that does get out to the general public, demand will start to pick back up, and then we'll start to get some normalcy back into our economy. Once that happens, I think we're going to have too much money in circulation, which will lead to inflation. Starting off with the first stock on the list is Kroger, ticker symbol KR. I like this stock because Kroger does have a very good PE ratio. You can see it's down in below 10, which right now is incredible. Kroger is a grocery store, for those of you that don't know. It's headquartered here in Cincinnati where I live, and it also does own some small subsidiaries like Ralph's out in LA. They're currently trading around the $33 range. I currently own about $1,000 worth in this account. I do have some in my IRA as well. And what I like about Kroger is just this constant strive for innovation and technology. They are very well off in the digital space. They do a lot of R&D research and investing in their products and investing in technology to make sure that the customer is getting a great experience with their digital app. They do a great job in terms of being on the forefront of innovation and technology. The second ticker on my list is gold, and ticker symbol GLD. Now this is just an index, so really any sort of index that's going to track gold prices is going to work just fine. I like gold because, as I stated in the beginning of the video, gold has always been really used for a hedge against inflation, and if we do see that, I think gold is going to continue to do well. Gold is also a very relatively safe investment, so I feel safe putting a few $1,000s in there, knowing that my money that I've made is going to be safe there and not really going to lose a lot of value. And if we look back on the few year chart at the 5-year, we can see gold has had a run up in recent years, going back all the way since December or so of 2018, just because we've seen the stock market perform very well. And typically when the market performs well, gold will not perform as well because, as you can see, it doesn't pay a dividend, and a lot of those stocks tend to only do well when the market itself isn't doing well because it is a commodity. And the third stock on our list is ICLN, ticker symbol ICLN. It's iShares Global Clean Energy ETF. Yes, this is an ETF. However, I think this is a spectacular ETF for the new incoming president. I actually already own this in my IRA and another brokerage I use, E-Trade, but I wanted to buy more in my more active account, which I use Robinhood for. I really do like this stock because I bought this back in October of 2019 in my IRA. And then during the dip here, I bought some more in my IRA. And you can see it has just exploded in growth. I think green energy is going to be the future. These companies really have a lot ahead of them in terms of growth. And I will accept the lower PE ratio now in terms of having better growth opportunities for the future. The dividend yield is around 0.3%, which is pretty low. The expense ratio, it doesn't list on Robinhood, but it's around 0.5%, which is pretty high for an ETF. But you do understand that there's a lot of research that does go into managing these types of ETFs. So I'm willing to accept the higher ratio in order to hopefully get some bigger gains. And right now we've been seeing that with ICL. And the fourth stock on my list is Walgreens. I think Walgreens is a fantastic company and they're doing some big moves. Walgreens ticker is WBA. Walgreens, you've probably heard of YouTubers talk about Walgreens before. They have been really doing great these last few months. Yeah, over almost 20% in the last month. Incredible. But what I believe and what a lot of other people believe is that when the COVID vaccine does become publicly available, they are going to be having the COVID vaccine at places like Walgreens and CVS, which I think this is a huge upside for the company. You're going to be having not one, but twice that people would come in to get the administration because the vaccine is twice that it takes. Walgreens doesn't have a PE ratio, so it's kind of hard to compare it that way, but it does have almost a 4% dividend, which is really great to see. If we go out to the 5-year chart of Walgreens, we can see not too pretty of a picture. They have been down pretty significantly in the last few years. This is just because of competition, really. Places like CVS and Amazon have been getting into the healthcare space. Kroger especially is really good at, like I talked about before, is starting to do a lot of pharmacy pickups. So that was a lot of where Walgreens' core business model was, and that's being taken away by competitors. So I'd like to see Walgreens kind of invest more into that market. All right, and the last stock on the list is Walmart. Walmart, ticker symbol WMT. Walmart is a company that I don't think will have a lot of growth from, but I think it's going to be a very safe stock for 2021. They do have a 1.5% dividend yield, a PE less than 30, so seeing that right now at a time where tech is really overvalued, in my opinion, that is great to see. They are also performing very well on the year so far, at least in 2020 they performed well, up almost 26%. And if you look at the 5-year growth chart, they have just been consistent. They have been a consistent growing company, and I think that they will continue to do well. Walmart is looking now to rival companies like Amazon. They have been trying to rival them for a while, but I do think that they're finally getting a hold of them with 2-day shipping and Walmart Plus, which I don't think Walmart Plus is that great right now, but I expect them to try to refine that technology more so that there's more value to provide to the customer. But you can see the trend as where Walmart is going. They used to be a grocery company where they just had a brick and mortar store, and they're focusing more now on innovation and technology and transitioning themselves away from grocery and more to that technology focus. All right, so that was 5 stocks that I am buying for 2021. Let me know what you guys thought of the video. Feel free to comment and like, and be sure to subscribe if you want to see content similar to this one. Catch you guys in the next one. Take care.